We have a great panel today to talk a little bit about the VC outlook. I think the title says Internet and Digital Media. And we have a distinguished panel of investors, both in China and actually globally as well. Just to give you a little bit of a preface of the venture industry in China, obviously it started in the mid-90s, and it started very small. Today, the Chinese VC market, in terms of money being raised, in 2011, it actually surpassed the US. And then last year, US surpassed China again. And there's about a 20–30% gap in funds being raised. Big picture, it's gone in 15–20 years. It's kind of gone from zero to almost the same size as the US in a very quick order. And therefore, it's been a very dynamic last couple decades. And what we're seeing is kind of new chapters, and the dynamics continue to flourish with creating new companies. There was a little bit of a mini ice age in 2011, particularly because there were governance issues, accounting frauds, and the US made a little bit of a comeback. And so, China VC market slowed down a little bit. Exits were a little bit more difficult, but now you're kind of seeing the defrosting happen ever since YY and VIP Shop went public in 2012. And of course, we have many recent ones. So with a little bit of that background, I'd love to ask this panel. We have Jenny, Annabelle, and Raymond to briefly introduce themselves, their firm, and kind of provides us their view of the venture industry today and maybe the trends that they're seeing.
Hi, everyone. I'm Jenny Lee from GGV. Just a little bit of a background on GGV. We are a US-China cross-border fund. Essentially, we have the same team investing both in the US and in China. We manage $1.6 billion across both sites. And as far as being in the market, we've been in China since the year 2000. And we have companies we've been very lucky to have been involved, investor, shareholder of companies like Alibaba, Qunar, UC Web, YY, David mentioned as well, some of the very innovative internet companies in China. Obviously, the next stage, they're all coming to us to ask about, can I bring the business model to the US? Can we find partners for them in the US? In the US, we've also invested in companies like Pandora and Square. Companies obviously has worldwide ambitions as well. And one of the key reasons we are partners with them is also to help them explore international market. That's kind of a quick background. In terms of key trends, I'll just highlight a few ones, and we can have the panel discuss this. Where we have invested in the last 2 years, primarily on the internet front, I talked about a couple of trends. So the first trend is really around consumer. When we think about around the consumer, it's no longer about, for example, e-commerce, about the consumer going to a website, looking through the whole millions of SKUs on Taobao and trying to find the items that they need. What we're more interested is we think that Commerce 2.0 is going towards social commerce, which is around individuals' like and preference, interest-based intent. And with that, we have been looking at around fashion, around travel, around home renovation. Companies like Melishuo, Douguo, and then House in the US, where it's friends who share similar interests, and therefore we would post the next cool skirt that I found on Taobao, have great reviews, and have Annabelle looked at it and buy that. Or I look at a great home renovation idea and I'm able to share pictures about it, not just share pictures about it, but find the site that can get to it. So social commerce is one area that we have made a lot of investment around. So around a person in commerce intent. Then the other areas that we've been spending a lot of time is really the sensor-based, hardware sensor-based connected devices. So whether, I tend to have a lot of devices on me. Today I'm just wearing one, but I used to have all kinds of pedometer and things like that. And I think the next generation, it's all about data collection. And as part of that data collection and analytics, it's going to, again, drive a lot of interest-based activity and purchase intent or data services around the individual. So that's also an area where we are spending a lot of time. We think that that's an area that's going to cross components, hardware product, marketing, branding, and essentially disruption in the channel. I think in China, Xiaomi is a great example. Of course, I carry a Xiaomi phone with Hugo Barrow in the audience as well. And, you know, I've been the first user since the first prototype came out. So again, you know, the whole integration that comes not just in a final product, but that arises from smart sensor. So that's across the value chain. We have invested in each of those value chain, and that by itself is a global play. It requires the investor to basically have global insight to be able to tap in and see the end product. So that's one key trend. The second key trend that we've been spending a lot of time on the consumer side. You know, I'll stop here and, you know, we can talk about enterprise later on.
Annabelle?
Okay, it's hard to follow Jenny because she speaks VC language. My introduction has always started from an explanation why a very old-fashioned media conglomerate, the largest one in Europe, I hope that matters here, is doing business via venture vehicle in China. Given they have a very heavy legacy burden to carry, that's a $22 billion annual turnover in a very mature portfolio. That's the parent company for Random House plus Penguin via the acquisition, the 40% of the global trade publishing market. But that's book. Our major chunk of revenue was coming from TV. You see the idols, the X Factors, talents all over the world, even in China. The Chinese audience tend to be more aggressive than I think. And music, BNG is coming back to market and services. We have all the business present in China. 20 years, we didn't go too far. Still, China's revenue accounts for less than 2% of our global turnover. Then we decided upon my graduation from B school, we should explore other activities via different approach. I was kind of inspired by IDG, why this media company can be a first-tier VC in China. Maybe we should acquire knowledges from the innovation center really is for incremental improvement on business model monetization rather than disruptive technology you have to acquire here. But if you are looking to transform a business, maybe that's more relevant for you to really test ideas that's more relevant and practical in China, how to serve a massive audience, understand next generation consumer behavior, potential advertising change. Really, I think that's success for us for the moment, although we didn't have a home run in terms of VC return, but since 2008, we established an in-house captive investment fund, starting from growth stage Series B+, now moving towards to rather early stage Series A investments. We made investments into 25 companies. That granted us a lot of learning. I counted the revenue for those combined young startups last year was actually over $1 billion. That's bigger than our current operation with the 5,000 employees we had in China for 20 years. So that's the progress. Although we are just a minority shareholder into those portfolios, but the level of learning was really tangible, was incredible, and it granted us a lot of opportunities to create internal business development projects as well. When Jenny talked about to understand the China market slightly differently, I do believe that the innovations coming from China in a very unique way, and the Chinese giants, the top three is the 7 kingdoms, are really establishing the most advanced mobile internet channels to the next generation of entertainment. And as a media content-driven company, we see content becoming more relevant back into the picture as a focus for future media investments, and we will be really hopeful to really understand how we can play a role relevant, being a value-added content provider to Tencent and the like. Secondly, I think as a media company, we realize majority of our revenue from advertising. Advertising itself has to be redefined to be a different level of products, different level of innovation, different ways of thinking. And this has to be location-based, this has to be real-time, it has to be powered by social network, instant messaging, has to be a very enhanced experience to discovery. As e-commerce player, I think we have a 60,000 people, pretty heavy division doing all the tedious work around the globe. In China, I think we still want to be a dedicated professional provider for back-end supply chain services. But on the other hand, we also want to tap the market via successful customer acquisition. That's Jenny and I talk about, we actually end up investing in 2 competing companies. One is Meilishua, the other one is Mogujie, because we do believe the social commerce sector can be much bigger than the 2 companies can really attack.
Multi-billion.
multi-billion sector. I call my Moguji company is the sweet home to the gossip girls in China. It's purely UGC-driven social community that's highly relevant. I still remember when the company has only 9 people, we went there, made an investment. That's our first Series A investment. I took them to our own operational portfolio. Really, it's the largest female fashion, lifestyle, home decoration, parenting magazine group. I showed them, telling them this is the future generation of female lifestyle. You should take a look and find ways to incorporate. But they were being too arrogant, saying that, oh, editorial superiors, that's professional skill set. We don't think we want to compromise on quality. We still want to maintain our brand image. But after 9 months, Moguji is no longer interested in talking to Rayleigh because their traffic is much larger. And the other education to our European colleague is they were concerned China is all about eyeball and traffic. There's no real monetization. I showed them the Tencent's profitability is better than selling drugs. And secondly, I also showed them the young startups. Since day one, Moguji has a business model. They are making money, and they are profitable already after 2 years in operation. I told them the daily traffic for the website is already 5 million. On mobile, 1 million on a daily basis. They are getting used to this kind of numbers, but still interesting. Until I told them the company is making money, more than $1 million per day. So they think this is something really going. So I'm just providing this information saying that we're really acquiring the knowledge, the innovation in a very practical way to transform a pretty old-fashioned company. I think China is the place to be.
Raymond?
Hi, I'm Raymond. I'm from WestSummit Capital. We're also one of this cross-border fund. And we actually relatively new, and we're in business for roughly 4 years. And we are initially sponsored by the Chinese sovereign wealth fund, CIC, China Investment Corporation, as their overseas tech fund arm. But now, since we have raised additional new investors around the world, become rather independent. And actually our investment strategy is pretty simple, that we basically call it China angle, which in the way that we are basically looking for the companies in the outside China and to be put money in, to become their shareholder, and then leverage our strong domestic China networks and entrepreneurial circle and help the company grow business over there. So in terms of trend that I would see a couple of them. Number one, I will grade the 2 latest here that in terms of the China, there's a big booming trend. It's really much in the gaming space, more in the mobile game. I was former CEO of LinkedIn, which was the mobile value-added service in China. That was like almost 87 years ago. That was a very, very booming time. But now I look at this space, I almost have the same feeling with like a crazy, many companies to come up to competing in that space, particularly in going to the mobile game space. And I believe that they will grow lots of great company there. So which on the one hand is a great opportunity. On the other hand, we're a little bit careful on the valuation, on the so-called bubble, but overall, that's great trend. If you gave me ask me for the stage of this one, if I read from 1 to 10 in terms of, everything has their circle, right? I still believe this is relatively early. Maybe I will give 2 or 3 in the stage. So it means there's still a long way to go. There's a long way to, hopefully for the investors like us to make money on that. By the way, we invest 2 companies, actually both here in the Valley, one called Unity 3D as the software platform for the mobile game, on the browser game, on the mobile game, which has been growing tremendously, very successful. Almost nowadays, the overall download, the game download on the App Store, more than 50% of games are using Unity and the software. Certainly, Unity is also in the transition period, going to have a bigger future in that space. The other company is very, very interesting. It's called the Twitch. If you have, the Twitch, the people doing that is an interesting name. It's a very interesting model. It's like watching other people play games, which is another San Francisco based. So that's very much like Jenny said, the world is changing to this, because not only watching, they can also chatting, like a little bit like a YY kind of model. So you're like a social media with the video game, that's in that kind of a circle. It's a very, very interesting company. The company has grown very, very tremendously with huge, the traffic and the momentum. So that's very interesting. We'll continue looking for this, hopefully, the ecosystem, the component in this multimedia game industry. The second trend I would say that was I'll consider as the globalization of Chinese companies. I've been in this business for a long time. I've been hearing that the Chinese company always going to go to abroad looking for opportunities, so on and so forth. But in the past 6 months, a year, I've never seen such a strong momentum. And I think Duncan said one very funny word. I want to borrow his word, we call Beijing. Now the Beijing spelling B-A-Y-J-I-N-G. Beijing is because the Bay Area and Beijing is so converged into one place. Thanks to Duncan's great invention on that word, which I really like that. So very, very often you see people here in the valley that is supposed that you're friends that you otherwise see in China, in Beijing. And then take another example. The Hugo is sitting there. Now it's recently joined Xiaomi. This is evidence that the Chinese company now very, very seriously looking for opportunity. And also Tencent's Weixin has been very popular outside, not only in China, but outside China. Almost every major Chinese, particularly internet company, has set up some kind of operation in the Bay Area or in US. So I see that trend. Not only people come here to acquire the sort of, first of all, at very, very high level, I think every CEO from China would benefit to say, I really like the Silicon Valley sort of a culture. I call it state of mind. So that's something they're benefit for their intellectual and spirit. And then they're looking for some technology. And then they're potentially looking for expansion outside China. And then that's where they become so-called global company versus any Chinese company. I definitely see that trend going on. So which means that also bring to lots of potential opportunity for potential merger acquisition, investment, or even complete 100% of acquisition of any future US company. So I think that's something very significant.
Yeah, I think let me transition into a series of questions here. As Raymond said, for most Chinese companies, especially venture-backed, even as far as 5 years back, IPO was pretty much the only exit available. Domestic Chinese internet companies weren't large enough where they didn't have the mindset of mergers and acquisitions or going outside of China to buy companies. And at the same time, more traditional Chinese companies, were not willing to pay ridiculous prices for startups. Today, it's completely different. You have Baidu just bought 91net, the third largest app store, Android app store. Well, they also have iOS too, for about $1.9 billion. That was the largest M&A. Alibaba is buying a couple companies as we speak. And when you put all that together, what you're starting to see is a very similar trend that Silicon Valley saw, which is, in Silicon Valley, actually most of venture exits are M&As. And in China, it's just starting to happen, and it's becoming a realistic outcome. So let me ask each panelist 3 questions. So first, let me ask Jenny. There's been an angel boom in the U.S. Obviously, when times are good, incubators and angel investments pop up. It's happened in '99, 2000 as well. Many incubators ended up being incinerators in the U.S. by 2003, 4 time. This time, people say it's a little different because the cost of capital to start companies now are much lower, et cetera, et cetera. Talk a little bit about how the angel movement in China is impacting venture capital as well as entrepreneurs, and are there any differences between what's going on in the U.S. and China?
Yeah, so this as a expansion stage capital fund, this is a great trend for us. like it's fantastic for us. We tend to come in about 50% in B round. We have about 20-30% in A round. So what we do very clear within our ecosystem is the angel community. Talk about China first. So in China, I think the last few years, it's been a bit more, the angel community is smaller, and it's been a bit more about super angels, right? So whether it's the Chai Wenshen or Lei Jun ecosystem, I think they've all come from entrepreneurs who had a network. They were part of, say, Tencent or Baidu or Alibaba, and therefore when they came out to be angel, they come with a lot of people relationship, and therefore they were able to capitalize on that seed investment. For where we are at GGV, it's fantastic for us, right? Obviously, we are early investor in Alibaba. One of my other partners sat on the board of Baidu for 6 years. So there's a big ecosystem where we are invited to the family. So we would tend to discuss with the angels in terms of what's the right sector and what's the right trend. I think fast forward, in the last 1-2 years, we're starting to see that second layer of angels come out. So these are the guys who may not be from 10 years ago, or founders, of public companies in China, Lingtuo, as Ray was. But really the old guards, right? The early employees at Baidu, early employees at Tencent, early employees at Alibaba, and then the next generation, whether it's Qihoo or the game companies, I think we're also seeing them come out. And within there are subsectors. So you may have angels that are in gaming, there are angels, commerce, and things like that. So for us, we actually like it. We think that China actually doesn't have enough early, even seed qualified type investors. And these entrepreneurs, as they bring capital and also that willingness to spend time with other new entrepreneurs in the market, it would help to educate the base of entrepreneurs coming out from China. So 10 years ago when we were in China, 9 out of every 10 entrepreneurs we meet, first-time entrepreneur. We have to explain, we have a Chinese translated version of the English term sheet, and we have to explain every single clause, what it means, what's a redemption clause, what's a liquidation clause, and kind of bring them up. But today, I think the entrepreneurs, we're starting to see probably out of 10 now, 5 out of 10 entrepreneurs are serial entrepreneurs. So they have done startups before, whether they fail or not, they have done it before. And they are more educated about the process, and therefore they are also more networked today. So the team, the quality of the team that's being put together is definitely a notch higher as well. So I do like the trend. I don't see those angels as competitors. I rather see them as great partners. And today, whether it's the team from UC Web, the team from YY, we continue to see that fresh blood that's coming into the market, which overall, it's great because internet is a sector where every 3-5 years, you have this brand new company that comes out with a pretty innovative business model. And so having that fresh blood, angel community, add to it, I think is especially vibrant as well.
Yeah, it's very interesting. In the U.S., the angel boom probably started about 2.5 years ago. And now, there's actually quite a large number of startups that's starting to struggle to figure out the Series A's and the Series B post that angel seed round. And my guess is that in China, over the last year, a lot of the angel investments were done with fervor. And probably in about a year from now, you kind of see a little, the oversupply of startups, and then VCs trying to figure out which ones are the good ones. And I think, it's mirroring what's happening a little bit in the U.S. So Annabelle, I'd love to, since you're with Bertelsmann, we're seeing this major shift to mobile. In China in particular, Android's been very successful. 70% of the smartphone market, and also creating great indigenous players like Xiaomi and, of course, Legend, Lenovo Group's doing quite well with the phones. In the U.S., we've seen this shift from internet to the mobile, and many internet companies are struggling, in terms of advertising. An eyeball on the internet was easier to monetize than an eyeball on the mobile phone. but at least it's still, at least you can still monetize on mobile, and the gap is getting closer. But in China, the shift to mobile was quicker, larger in scale, and monetization gap is so big, right? So suddenly a lot of internet companies, when their audience shifted 50% to mobile in a year, they couldn't make money off the mobile, and they were struggling. And I'm wondering, when do you think this, mobile will truly start creating enough money in the ecosystem? Of course, gaming, as Raymond said, we know is a slam dunk in China. But outside of gaming, when is mobile really going to make money in China?
Well, that's a big question, a real question to us. That's why we pick China as the testing field for us to move most aggressively on testing the potential monetization. Given the market, we have no legacy and no potential of cannibalization to the problem you mentioned in our established US and European market in our internal price conflicts. So I think definitely mobile gaming will be the first phenomenon, but the consumptions on mobile reading, on watching video, on listening to music are still there. We are in the hope that as long as the ecosystem continue to evolve, people will be willing to pay for that. Not only advertising funded, my personal view will be mobile advertising tend to be overestimated because it's hard to measure and it takes really long process to educate and return the result.
But a cynical person would say, nobody in China is ever going to pay for content on their phone.
I agree. And nobody for the moment, but actually they are paying. They just don't know. They're paying China Mobile for $5.7 billion worth of ringtone and ringbacks every year. That's the purchasing power that was just robbed by China Mobile. I definitely don't think this game can last for long. No one will be really happy for owning 80% of market share. You're screaming for competition. There will be there. Baidu once had 90% of the market share, but you see the competition coming in. I really see China Mobile is also under pressure. And Tencent really are reinventing the entire telco-dominated ecosystem. In future, there will be additional mobile distribution channels, maybe via Weixin and WeChat, maybe even via Weibo. And I really see this in the very beginning content, for example, taking music as an example, was only viewed as a tool to acquire traffic. As long as people listening to music and come to the website, we can firstly monetize via maybe news and later e-commerce. This is just only just gaming. This is just a traffic driver. But I think those big internet companies will also be running out of growth topics. As someday, they will reconsider the still sustainable consumptions on the fundamental entertainment formats, being reading, being music, being video. Of course, the format of content has to be reinvented, but they will have the incentive for Tencent and Baidu and Alibaba to package the product differently to sell it. What we can do is continue to be paranoid investor into those content, consolidate and getting ready for the next more aggressive move. Where do we start? Has to be China. Another reason because I think Chinese people, we talk about big data in the morning session. It's the most massive scale of audience. And secondly, they are the least sensitive to privacy. So if you want to start a big data trading convenience package, content service has to be starting from China.
Yeah, I agree. I agree with Annabelle. It was quite remarkable. One of our associates in the Beijing office started paying, I think it's about 2 RMB per month for QQ Music. And I said, well, are you doing that because you feel guilty because for 10 years you were downloading for free? Or, is this a truly good service? Or, you don't want to be caught, torrenting or, downloading something from Xunlei. He said, this service is good. And, because it's only 2 RMB per month, I'm willing to pay. And, yes, I feel a little bit less guilty. And at the same time, I get slightly better content.
Nice.
And so it's very interesting to see how, people in China are starting to pay for content, which, I think 5 years ago, I don't think anybody was paying for content.
From institutional level. Yeah. I think 5 years ago, nobody paid for our Idol and X Factor. Now they're paying serious money to Voice.
Yeah.
Right.
I agree.
So if I were to add, the expected monetization from mobile for this year, just for games, mobile games, from China is expected to exceed $1 billion. So, you know, when we look at mobile, we do see it as content, commerce, and communication. One of our portfolio company on the mobile gaming distribution platform, they actually have, so the conversion for paid, every 100 user that downloads their games, 30 of them actually end up paying. For mobile conversion, 30% paid conversion is very high. If you look at traditional PC or browser, the conversion is less than 3%. And the average ARPU, so average revenue per user who's paying for different types of game content, is around $20 a month, US dollars. So it's not low. So when we were shocked when we saw the data, because the conversion, the paid conversion is high, the amount is high, and when users are paying, sometimes it's direct for the content, sometimes it's in the form of virtual currencies, which they can use to make themselves look better, right? So if we ask Tencent, they're starting to sell stickers on WeChat. What's stickers, right? So it's, again, virtual items that the users in China, they're willing to have this stored value wallet and then be able to sell to show themselves in different form. So the monetization, as we think about China, is expected to take a very different form than just monetizing off the traffic from the US. And that's where I think it's cause for a lot of excitement.
And that's actually a good segue for, I'm going to ask a question about innovation to Raymond, which is, you know, in many ways, Japan and Korea have paved the way how to monetize mobile. If you look at WeChat, Weixin is actually a, I hope Martin's not in the room anymore, but you know, Weixin is actually a copy of a company called KakaoTalk in Korea. And it's yeah, and it's not, but by the way, Martin and I had a discussion yesterday about this, and you know, he acknowledges. And what's interesting is, and of course, Line is very big in Japan. They both have started games, and they I mean, they're stickers, of course, and then their revenue is going through the roof. And so it'd be very interesting to see China when WeChat, Weixin starts putting games. A lot of money is going to flow that way, away from a lot of the mobile game players today. But at the same time, I think it will make the market much bigger and great opportunity for new developers. And so Raymond, I'd love to ask a question about innovation, which is, you know, I think a lot of Chinese internet companies have probably for almost 15 years called, hey, you know, it's a copy of something in the US or something in Europe or something in Japan or even Korea. And in 2012, we saw something very interesting, which is when you look at the two companies, YY and VIP Shop, that went public, there are no, you know, major companies that have been as successful as YY in terms of real-time communication during the games. Yes, those features are available elsewhere, but YY, you know, it was the first where it could take a company public and be multi-billion based on their business model. You look at VIP Shop, and you know, you see Guild has been somewhat successful in the U.S., but at the end of the day, you know, it still can't go public. It's not you know, doing like super well. Whereas VIP Shop in China takes a, you know, similar model, and then it's the first one to go public, you know, $3 billion in market cap. And what you're kind of seeing is models that may not work outside of China, or is doing, you know, maybe too small, but you go to China and you suddenly have this localized innovation finally working, as opposed to, you know, oh, this is the Yahoo of, you know, Yahoo of China or the Google of China, and like in the past. And so I'm seeing subtle changes in unique innovation. But at the same time, somebody would argue, right, well, yeah, but the fundamental technology for YY is still, you know, is real-time, you know, game communication that existed, just happens to be China's a big market for that. And at the end of the day, you know, probably 7 to 8 out of startups in China that we see, you know, it's still they will often refer to, well, in the US, there's this idea, and that's what we're trying to do. It's still about 80%. When do you think China will cross the bar where more than half of these startups are going to come with their own ideas and uniquely Chinese?
Well, I think there's still going to be a long time. Okay, the Chinese people's mentality is starting from the actually potential huge domestic market. Once you have your product, doesn't matter if it's a virtual product or it's a solid product, that you can sell a different layer of people. Every purchasing power come this way, right? You can sell the iPhone sell on this level, Xiaomi's, or there's some kind of a lower level. So that's why the Chinese people, when we had the argument one day to say, oh, Chinese entrepreneurs compared with the entrepreneurs in Silicon Valley are lack of innovation, which in a way I say agree or disagree. In a way, the U.S. Silicon Valley entrepreneurs are very good at the so-called change of the world. They have innovation that to tell the existing Fortune 500, 1,000 CEOs to say, you know what, this is the way that the world is going. You got to follow this trend. But looking to the Chinese entrepreneurs, they say, this is the way customers are not paying our money. They're not paying. They're not willing to pay for this one. They're not willing to use this product. But we have the innovation to find a way how to charge them. So that's the innovation, sort of in Chinese way. Okay. So therefore, if you talk about YY, right? YY is very typical. The situation is like, basically it starts with something called the chatting on game. Jenny was there. However, how do you find the monetize of that, right? The other example that I know there's some competitions here, the Qihoo 360, right? They basically, their innovation is say, in the world, people offering something called the security antivirus software by charging people. This is like a no-brainer. Yes, everybody pays for that, for the protection of your desktop. They say, you know what? We offer the entire things free. Okay, then all of a sudden you have lots of people using that. Then they start finding some other way to use the monetization. So I think from that point of view, you're going to continue to see Chinese entrepreneurs find a way, because of the unique situation, that how to find the best way to serve the end user's need while let them to pay for that, versus really on the business model side to create a sort of innovative business model or technology to have that. So therefore, I think that's more my view on that. That's basically it.
I buy that. I think in terms of monetization, service models, I think
marketing
China's
strategy, sales strategy, so on and so forth. Yeah,
but since I have 1 minute left, let me ask each panelist: how many more years until you see the majority where a Chinese startup's going to bring their own unique innovation that's not related to, outside of China? Just make a guess. How many years later will that start to happen?
So I have a different view from Ray. I think innovation is here today. If you define innovation as only technology, base level, research type innovation, then I think that's too narrow a scope for innovation. Innovation is about building sustainable big companies that can go on for the next 5 to 10 years or even longer. And essence to that innovation is business model, which is monetization. So as Ray had a couple of examples before, I'm completely on it. I think today, China 2.0, right? So I'm definitely bullish on China. I've been there for the last 10 years. I have seen in the last 5 years so much innovation in business model for Chinese companies that I don't think I want to be anywhere else. So I believe it's there today.
But I asked a different question. I acknowledge the business model. I acknowledge the service model. If you look at technology, how many more years do you think it will take for?
Well, even for technology, right? I mean, when you talk about YY technology, their voice back-end network carries more voice minutes than Skype for the whole year in YY's single month of operation. So I do think that it's.
But that's today. About buying more servers and
It's not.
and
so
working
when it
out
comes
a
to
scalable
voice,
architecture.
well,
right?
so I think when it comes to voice, real-time interaction by itself, there's a lot of recognition technology that goes behind it as well.
So, but there comes a time, though, in the technology, VC industry, where technology does have to start playing a role. And maybe I should ask it that way, which is, when do you think technology will play a larger role? Because if you, we live it every day, right? If you compare to Silicon Valley, maybe, in Silicon Valley today, probably 4 out of 10 are technology companies that come through our doors. In China, it's maybe 1 out of 10. And so, when do you think that will equalize?
It's going a long way.
Yeah.
In my view.
How about you, Annabelle?
Well, that's going to be a long way to compete, really, with Silicon Valley, but it's happening now to Europe already. I actually demoed the WeChat product together with WhatsApp in front of Vodafone and all H&M and all our potential clients and customers here. They were blown away by the robustness of technology. WeChat is certainly much more advanced and sophisticated in terms of technology.
Yeah.
And I agree with your great example. We regret about a great deal for VIP shop. I personally dismissed this opportunity because we invested in MongoV in Europe. It didn't grow too big. And we invested in by VIP here in US, so for 2 times of only $100 million. So we missed the multi-billion-dollar opportunities. Nowadays, we're already finding difficulty when writing investment proposal back to IC. What's the comps? So when it comes to Mohuji, I can no longer define this is Instagram plus Pinterest commerce. So something unique is really happening now in China. I see 5 years' time, I don't know who else, but in my own portfolio, I will see something really unique technically from China will account for 50%.
Great. On that note, I want to thank the wonderful panelists. I think I'm over time already. So I want to pass the baton back to Duncan.
Thanks. I'd like to thank you. Thank you.